Debt crisis averted. Or has it really been averted? There are so many moving parts to this. And is it just a manipulation to get you to look over here while stuff is happening over there? Okay, they averted at the very last second. They averted and lifted, or suspended really, the debt ceiling. And so what does that mean? That means that a lot of treasuries are about to be issued. So does that mean that we're out of the woods? Well, no, they went to the line and the whole world is really watching. And they're wondering what's going to happen the next time. Now it's suspended until January of 2025. And of course, they passed the Fiscal Responsibility Act. You must be careful of the name because the reality is it is always typically just the opposite of what the name says. So the Fiscal Responsibility Act, are they going to be fiscally responsible? Well, have you seen them be fiscally responsible yet in your lifetime? Because frankly, I haven't. And there are some things that go into that, but quite honestly, amid the celebration, some Republicans were left fuming. The disastrous debt ceiling deal just passed with more Democrat votes than Republican votes. Tells you everything you need to know, calling the bill shameful in a tweet late Wednesday. Isn't that interesting that it passed with more Democrat votes? But does it really matter if you're a Democrat or you're a Republican? Is this really a finger pointing, them or us, or is this just an excuse for stalemate over and over and over again? So let's take a look at that debt. With rising inflation, bank failures, and massive layoffs across multiple sectors, the future of the economy remains uncertain. It's no wonder the central banks have been getting prepared by stockpiling gold. At ITM Trading, we have spent over 27 years building a team of seasoned researchers and analysts who can help you prepare for any financial crisis. Our experts are ready to provide you with proven strategies to safeguard your wealth and assets in the event of an economic downturn or currency reset, which is frankly inevitable. Don't wait until it's too late. Schedule your free gold and silver strategy call by clicking on the link in the description below. This just goes through the first quarter of 2023 where the debt ceiling was stalled, but now it's been suspended until the first quarter of 2025. And so even though they're talking about the spending limits at 2022 levels in most cases, well, guess what? That really means that they have a free ticket to push this debt up as high as they want until first quarter of 2025. Now, I'd like to point out something. These gray lines that you see here in this Federal Reserve Education Department chart and this little faint one right here, those are official recessions. And please note that every time, especially since 2000, every time we hit a recession, the debt grew at a faster and faster and faster pace. So my question to you is, how long do you think the world will accept these debt levels? Because that means that they can issue more treasury bonds, and a bond is a debt instrument. And we're going to talk more about that in just a second. But what backs the currency? The ability for a government to grow more and more and more debt. Even governments have limitations. It doesn't matter whether you're an individual, a corporation, or a government. At some point, there are limitations to how much debt you can grow. What are those limitations? Well, my friends, I think we're about to find out. Because when they played this game in 2011, we got a debt downgrade. Now, did it really impact us? Maybe a little bit. And as far as the lower your credit rating, the higher the interest that you have to pay. And a lot of this debt is short term, so it's rolling over into a higher interest rate environment. Now, Wall Street continues to think that the Fed is going to push rates down again. Maybe they will, maybe they won't. Have they really conquered inflation? I don't think so. It's still compounding at a very high level. But Fitch, which is one of the credit rating agencies, on Friday said its rating will remain on negative watch despite the debt deal, as repeated political standoffs and last-minute debt limit suspensions lower confidence in governance on fiscal and debt matters. And this is a con game. It requires confidence. And we've seen what has happened when banks lost confidence in banks back in 2008. Central banks lost confidence in central banks in 2015. And Wall Street lost confidence in the central bank almost a year ago in August. There is only one level of confidence left, and that's the public confidence in the system and in the currency.